Hello, everyone, and welcome to the CoreDAO quarterly webinar. I'm Jacqueline Melinek, the co-founder of Token Relations, and we are fortunate enough to work with CoreDAO, and I'll be moderating this discussion. Joining me today is a great group of panelists: Core contributor Rich Rines, Hashnote founder and CEO Leo Mizuhara, Figment Protocol Opportunities Lead Drake Breeding, and Hex Trust VP Roshan Daswani. Before we get started, I'd like to remind listeners that during today's recording, we may discuss forward-looking statements and actual results may vary from today's statements. With that said, let's get started with some background and context. Core's chain is a proof of stake or POS layer for Bitcoin. It currently has about 635,000 daily transactions and over 28 million unique addresses and about 5,500 Bitcoin staked on its protocol. That's a lot of numbers. But I want to get into the network growth, and Core has also increased its TVL over 24,000% this year alone, from 4 million at the beginning of the year in January to about 970 million at the time of recording. This put Core in a leading position compared to other Bitcoin-powered networks like BitLayer and Stacks. As the metrics show, this was a pretty big increase in less than a year. Rich, what do you think are some factors that are driving this increase today?
So great to chat here again, Jacqueline. The core ecosystem has really kicked off, as you mentioned, from about 3 million earlier this year to now about 1 billion. I was hoping we were going to be right at 1 billion for the webinar, but sometimes the stars don't fully align. And all credit to that goes to Core's amazing builder ecosystem. I think Core has taken a very kind of all-encompassing or surround sound approach to finding amazing builders that want to make Core their home, not just for the short term, but for the long term, and to be able to build real businesses on top of Core. And that's what's special about the Core network, is it really is a very large active user base of hundreds of thousands of different folks per day all around the globe. And that's a very unique proposition for many of these builders who are kind of more traditionally focused on, let's call it grant shopping from network to network. And that's been a very different and all-encompassing approach from marketing support, BD support, liquidity, et cetera. And we think is very poised to help Core grow into the next level of ecosystem development. And we've actually been really fortunate to have some of these early flagship protocols like Colend actually go all the way now through their full TGE and launch on major exchanges, which is really the first protocol since TON to really have their projects get to that point. So we're very excited about a lot of the growth so far this year, but it's still very, very early days.
100%. And how large of a part does staking play in this, or does it even play a part at all?
So Bitcoin staking, despite what we would like to have happen, actually does not count as TVL. So those are actually totally separate. So that 5,500 Bitcoin actually is not counted as part of the billion that's on chain. The billion that's on chain is actually active TVL inside of DeFi protocols: Colend, Pell Network, Avalon, Bitflux. Like, you kind of go down the list. And if you combine them together, like some other protocols do, it's almost 2 billion. But we view those as two different metrics that are ultimately for different user bases as well. On the non-custodial staking side, that's for more passive audience, folks that don't want to come on chain or maybe get involved with bridges or atomic swapping over, versus your on-chain folks who are actually actively participating in these protocols. With the Fusion release that happened earlier this week, there will be some of these liquid staked Bitcoin tokens like LST-BTC that will help bridge that gap, if you will. So instead of doing Bitcoin staking or bridging over and becoming active in Core's chain, you can do both. And there's many amazing partners that are already launching their LSTs as well, like Solve. So we expect to see this be the next leg up of ecosystem development and growth.
Yeah. In our last quarterly webinar, we talked about institutional investors and how they want access to yield for their Bitcoin. I know we have some panelists on here, so I want to ask you all, how important is it to these institutions that hold Bitcoin to have options for generating yields? Is this something that they want? What are the conversations like there?
Yeah, I can speak from my perspective. So, I work at Figment. We're a institutional staking provider, and Bitcoin is not a proof of stake asset, right? So for us, it's kind of dipping our toes into the Bitcoin world for the first time. And I think we have conversations with folks that are very familiar with traditional staking on a network like Ethereum or Solana, things that kind of have staking built into the protocol. The conversations around Bitcoin are a little bit different. They're a little bit more about how I'm actually paying fees and a lot of times to a custodian to hold my Bitcoin, right? So I'm changing this from something that is a cost for me to something that's actually generating rewards through the staking mechanism. So I think it's a really exciting narrative, and explaining the core mechanics, no pun intended, to some of these folks has been a lot of fun, and good to get them involved.
I think we're seeing much the same type of demand that Drake is talking about. Definitely a lot of conversations around, hey, I'm paying a custody fee, like how do I overcome that? But also the largest holders of Bitcoin are all going to be very sensitive to the efficiency of their assets and their ability to earn yield on it. So it comes up more frequently from large holders than small holders. The other thing that I'd point out is, to some extent, the last deflation cycle in crypto happened largely because of over-leveraging, and over-leveraging often happens because people are looking for yield on their assets, right? They're lending out their assets to get that yield, and solutions like Core's dual staking allow us to earn that yield without that same kind of leverage generation and counterparty credit risk that comes from the previous solutions. And I think that's really important. It means that for us, at least, our clients are much happier to get the kind of yields that you guys can provide without taking the same kind of risk that they were taking in the last cycle. And that clearly would happen again if we see credit cycles in TradFi all the time, right? And some of them are comfortable with that. Some of them will keep doing lending, but I think this ability to use those assets in order to support another network is a much safer and a much more builder-friendly way to use your assets than the potentially dangerous and, as we have seen, a potentially kind of globally dangerous way to earn yield, which is the lending side.
Mm-hmm.
Cool. Great points, I think, mentioned from Leo and Drake. I think to kind of chime in here, I feel that it's quite fundamental at this moment, given that how the price has increased and, the flow that we're seeing. A lot of institutional clients have built up a lot of Bitcoin over the years, and they are looking for yield, like, the traditional assets they have, invested in over the years. And a lot of them look for vetted and reputable venues, such as, Hex Trust. So, it's very important for us to, kind of get on the curve and enable this sort of staking-like products that, Core has been pushing to our clients.
Rich?
So I think the other panelists covered it pretty well, but I agree, this was a missing piece of the market, right? If we go back to last cycle, BlockFi, Celsius, Genesis, you go through, right? It was these decentralized counterparties who ultimately blew up, unfortunately, and Bitcoiners in particular were victims here as well. And like everybody that's in the Bitcoin space for some time knows people who were directly impacted by this, but the demand for yield generation will always be there. And that's where the non-custodial staking product, where you maintain the keys, it's only using native Bitcoin time locks, is a true one-of-a-kind product, and has kind of opened, Pandora's box here of potentially these new avenues for earning yield on top of Bitcoin. And we've seen, tremendous response so far, but it's still quite early days. And that's really kind of what people are now coming to expect in the market and demand ultimately, and that's good for crypto. I think I was talking to someone the other day, and they mentioned, hey, we haven't seen centralized lending, come back yet. We're not in a bull market. And I think in many ways that's true. We saw that Binance announcement around 20% on their stable that I think freaks some people out. But we'll see, right? But it's just kind of understanding, what the market is looking for, and then the kind of enormity of some of these, capital bases. And we've made it, no secret that Core wants to be providing yield on the Bitcoin ETFs once that eventually is possible in the US. I think we're going to get an Ethereum staking ETF sometime in the next 6 to 12 months. I think Bitcoin will not be soon to follow. And that's the next phase of the institutionalization of Bitcoin. We had the spot ETFs this year, yield-bearing ETFs are coming, and hopefully Core is powering those.
Mm-hmm. I mean, to your point, it's still in its early days, but there's a lot of development going on. So what would you say are the main barriers or concerns for traditional financial institutions when they're considering yield products?
So at least from our point of view, and I play kind of the chief evangelist role as well, or chief educator, most of it is an education problem today. And these are new products, and it's really going through the nuts and bolts and you should be able to understand every piece of the detail before you get involved in one of these systems. Because again, if you don't know where the yield is coming from, you are the yield. That's a cryptoism, but it's always, always true in every cycle. And what, the core approach is to this is going through all these different pieces of, hey, it's native Bitcoin time locks that's been live since 2015. You're time locking it to yourself. It always remains with you. You claim it on the core chain. Here's where the yield comes from. Here's why it's sustainable. Here's how dual staking ties these networks together in a capital efficient manner beyond just the security sharing agreement of with 75% of the Bitcoin hash rate is currently secure in the core chain. And it goes on kind of throughout those pieces. But the idea here is not to get these large holder institutions to move all their Bitcoin on from day one. It's to build that relationship, and it's to start to work together to dip your toe in the water, because ultimately we view this as a 10, 20-year journey. And the idea here is you're not going to start with everything on day one. You're going to start getting Bitcoin yield for the first time. You're going to hopefully size up over time. And that's how we build a big business together for the long term.
Mm-hmm. On that 10, 20-year journey, we're still in the early days, and it's maybe day 1, day 10, year 1, whatever you want to call it. But for everyone on the panel right now, like, what do you think would be some milestones that need to be hit to show that this is actually going to continue to get traction and scale?
I mean, I think we're already hitting those milestones, right? We're
What
getting real close to market cap that's like as big as or bigger than gold. Mm-hmm. Bitcoin is now the number, I want to say 7 or 8 largest asset in the world. Like, it is a big asset. And it having been around for over a decade helps as well. There are a lot of large money managers who think of that 10 years worth of data to be enough data to like back test what the risk is around the product and such, which I think is a little bit misguided, but all the same, it is one of the things that people think about. To build on some of what Rich was saying a second ago, also, the thing that institutional money managers and institutional holders are most concerned about is always loss of principal, right? So when we think about these people who are large holders of Bitcoin and want to earn yield on that product, the risk of losing their Bitcoin is always the biggest fear. And education is part of it, but I think the history of Bitcoin now being in existence for a long time really helps. I think with staking, the fact that staking has been around for not quite 10 years, but getting close, right, is helpful, and people are starting to understand what that is. But also the technical details, like the fact that you're actually like locking your Bitcoin in place in their wallet, makes them feel a lot safer. And that's one of the things that I really like about the core product, and this ability to create this real yield while keeping your asset somewhere that you've already deemed is safe. And that safety, I think, is really going to help core and core dual staking grow.
Mm-hmm. Leo, you got an Ethereum pillow behind you.
I do.
We had to bring it up. It's like
the original staker
in the room. How do you see Ethereum and other like tokens playing into this? And then we'll go back into like everything we're discussing. But I feel like I got to ask, and maybe other panelists if you want to chime in.
Well, honestly, I think we've seen that Ethereum is kind of losing the battle at the current moment, right? Mm-hmm. We see that many institutional holders are very comfortable with Bitcoin, and Bitcoin really is a store value asset. I think people who are investing in Ethereum think of it more like a NASDAQ type product, something that you're going to do analysis on their cash flows and their user base. And what we're seeing is that there's a lot of competition for that space, right? You might be thinking about Ethereum, but if you're thinking about Ethereum, you're also thinking about Solana and Sui and Aptos and Near and Tron, and like there's just so much other product that competes in that space. And honestly, none of them compete with Bitcoin. The ones that compete with Bitcoin are really like core, and like these other, there aren't a lot of players who are there to take advantage of the fact that there's this asset that is really just there to be a good store of value. And yeah, I was joking with the guys earlier that I need someone to send me a Bitcoin pillow.
To replace that one?
I'd be happy to put that in the background instead. Yeah.
If I could just add a point to that, I agree with that, and I think that Ethereum is really the first widely adopted crypto asset that brought the on-chain economy to the forefront for so many institutions, serious investors, serious players. We see the staking participation rate on ETH and how comfortable like big players are with it. And, that's kind of the gateway into DeFi and all these other new primitives. And so it feels like ETH is what made everyone comfortable with that. And now it's like, how can we build this in other ecosystems? And, Bitcoin, obviously the biggest TAM there by a long shot.
Mm-hmm. Yeah, that makes sense. So we talked a lot about yield. And I also want to talk about staking because that's a huge part of Core Network and also just the crypto economy in general. What do you think are some of the benefits to Core's dual staking model for holders, and how does that kind of differentiate from other Bitcoin-centric networks? And then from, the partners or panelists that we have on stage as well, how do you look at it in comparison to other models out there?
I can hop in on that one too, I guess. Hashnode is really supporting Core as our primary way of doing a layer two, I guess, side chain that's like using Bitcoin as a security, as well as the primary way we're earning yield on Bitcoin. Now, I think one of the things that really drew me to this ecosystem is that they're trying to create something that is sustainable, and they have a chain that is actually meant to do things. I get the impression with a lot of players in this ecosystem that kind of more longer term vision about how to create a world where we can both sustain usability as well as yield, that it's not quite as cohesive as what these guys have built here. So hats off to them. We really think that this project is the way that we can get people into something that is an investable asset for the better part of a decade. And so we are providing not ETFs, but investment vehicles that allow you to invest in a combination of Bitcoin and Core token. I think the fact that the way this is structured, as people come into this dual staking, it also helps propel demand and support the price of Core token is a really good way of creating that virtuous cycle rather than the opposite that you might see in some of the other networks. And yeah, I think as we see the price of Bitcoin go up and the market cap of Bitcoin continue to increase beyond some of the other assets, I think that brings Core with it, because as you get more Bitcoin, you're actually going to need to buy more Core to keep up with that dual staking fraction.
Yeah, it's such a strong flywheel. Virtuous cycle, probably even a stronger descriptor. But I think you're going to have these very well aligned incentives for folks to continue to invest in Core, continue to engage in the Core ecosystem, while at the same time, kind of getting additional rewards on top of their Bitcoin. I think that it's just a very good long-term setup on both sides of it.
Yeah, for sure. And Rich, from the Core perspective, what are kind of the safety protocols put in place to ensure holders can maintain control of their assets while staking? Because that's an extremely important part for anyone.
Yeah, so it's fully non-custodial. So what we mean by that is you are only trusting the Bitcoin L1 when you're doing the Bitcoin staking aspect of this, which is so critical. Like as a Bitcoin holder and someone who's been in the space now for 11 years, we designed something that would work with my rigor in mind, and that just happens to be the same as some of the largest custodians and fund managers in the space, where it's you don't want to trust anybody with your Bitcoin. It's the most sacred asset in the world to many, many people around the planet. And that was very key to this design. This helped Core with so many institutional partnerships, custodians, et cetera. And we expect to see that continue to really pay dividends. On top of that, on the Core side, when you are staking, you also, again, are maintaining that Core yourself, which is so critical. And I think just to add to what Drake and Leo mentioned is, it's all about trying to get what we refer to as Bitcoin alignment. And the idea there is what Core needs to do is to help blend the Bitcoin community and the Core community together. And that's the recipe for long-term success here. It's not just the security sharing agreement that's been there since day one, but now there's a capital agreement in place. And the idea here is there's actually reason to participate in these networks beyond just it being a rewards token. And for many of these other networks, they're just meant to be sold down. They're not meant to actually help create this flywheel, to use Drake's words. And that ultimately is what helps create this long-term sustainable ecosystem and this long-term sustainable economics, which is so critical. And I think if you kind of look at the nuts and bolts of the core model versus some of these others, you'll see how this is so important to the network and has been since launch with our 81-year emission curve and so on.
Mm-hmm. How has this approach kind of changed in comparison to previous quarters, and where do you see it going, both near term and long term?
So we expect to see fairly large growth on both the staking side as well as on the TVL side on chain. Both are so critical. And I think Leo put it correctly, is like you've got your supply drivers and you've got your demand drivers. And in the core case, you have not only like this very vibrant and growing Bitcoin ecosystem, but you also have this other demand lever, which is this dual staking, and they function symbiotically together. And I think a good example of this, of like kind of showing how these things all coalesce, is looking at some of these LST products. So for some of these LST products, they're mostly approaching some of these other ecosystems as parasitic. And what I mean by that is they're just taking the yield from these other ecosystems. They actually don't give anything back. While in the core ecosystem, for these LSTs to go out and get the highest yield, they will also have to dual stake. So for every LST that gets minted off of Core's yield, the Core community is actually directly benefiting. And then conveniently for the chain's metric, that actually counts as stake and TVL if it gets used in the protocol. So it's a nice kind of dual impact there. But I think you'll continue to see that sort of reflexive nature of kind of the ecosystem side and the staking side feeding off of one another, and then ultimately helping to keep this yield long-term sustainable as more and more capital gets added to the system.
Mm-hmm. Yeah, I think that makes sense. Earlier this month, also kind of on the note of strategy and everything, the CoreFi strategy by DeFi Technologies, which basically unlocks like the MicroStrategy core approach with regulatory access to Bitcoin and Core. I wanted to talk a little bit more about that. Hopefully the panelists are familiar with that. Maybe they saw the announcement and everything. But Rich, how can this plan help innovate on MicroStrategy's playbook? There's a lot of conversations out there right now about what Michael Saylor and MicroStrategy are doing. And specifically, I'm curious, how can this leverage dual staking to bridge the gap between, TradFi and then BTCFi or BitcoinFi?
So first and foremost, hats off to Michael Saylor and team. I think it's the greatest comeback in any financial market we've ever seen, right? Like fully eclipsing the dot-com crash, which was just really, really tremendous to watch. And he's really doing things in the public markets that we've never seen before, right? Like he's tapping these much more liquid markets in kind of new and novel ways, and has kind of been this nonstop source of Bitcoin bid and has kind of become the new Bitcoin Jesus. How does CoreFi fit into this? Well, Bitcoin is a large asset, right? And even at Michael Saylor's scale, he's providing these sustainable sources of demand and inflows. And Core is going to be the smallest asset to ever have any sort of public vehicle that has a similar mandate. So we're very excited about that, as this will help bring dual staking to the masses. And also, where Core is a much higher beta asset, this should be very nice for the overall Core ecosystem as well, in terms of additional demand to help push dual staking forward, and then also bring on more and more capital into the Core ecosystem. And that's really the quote unquote open secret of like the MicroStrategy play, right? Is it trades at a premium to its net asset value. It then uses that to go put out converts or to go take out more debt in other ways, and then or issue shares and dilute, right? Like it's got kind of a similar playbook. MetaPlanet and some of these others are now doing this as well. And it's created this very interesting cycle, and we expect it to be very positive for the Core ecosystem. This entity will also do some interesting DeFi pieces on top of Core. Maybe it'll get into some lending and borrowing. So we think of this also as just like an additional general purpose utility vehicle to help Core in its journey into the public markets.
Mm-hmm. Yeah. For Drake, Rohan, and Leo, what is kind of your take on this plan and in comparison to the MicroStrategy playbook?
Just to begin, I think I think one major thing that has definitely helped the market significantly is the change in government in the States. We're seeing more serious players, traditional players, really seriously looking into this asset. Regulation, a proper regulatory framework will drive a lot more adoption as well of this asset. not just being held as a store of value, but really earning passive yield from this asset. MicroStrategy is a phenomenal example, a testament to this industry in terms of what Michael Saylor has done. And, I think Core's mission in terms of, providing a lot more than just a store of value is something that I feel that CoreFi and the MicroStrategy playbook are so aligned, because you are encouraging, other players in the market, traditional players in the market, to do more than just hold their Bitcoin. You're earning passive yield, dual staking opportunities, and we're going to see that side of the market grow a lot more significantly.
Yeah, I think that's a good point. MicroStrategy just has so much attention right now, right? I think yesterday it was at some point this week, it was the most traded stock in America, like above, NVIDIA and Tesla, something that hasn't happened in years, I think. And, it's just going to get investors thinking about what else can I do with Bitcoin, with these crypto assets. There's just so many new properties of, blockchain and the transparency, connection to other ecosystems, DeFi primitives built on top of it. Like, I really think that this is going to be just the way that people's imagination opens to things like CoreFi.
Mm-hmm. Yeah. I'm also seeing comments in the Core YouTube asking about the Core Fusion upgrade. So, Rich, what role will this CoreFi strategy play in the development of yield generation through that upgrade?
Yeah, so CoreFi in this case is taking advantage of the Fusion upgrade. And the Fusion upgrade is the largest upgrade since the network went live in early 2023. It was a true labor of love for the community and to help bring the network forward. And I think the way to think about Fusion is it introduced new primitives. And these primitives are very long lasting and are kind of the new pillars of the ecosystem, if you will. One of which is dual staking. And then the other one on top of it is LST Bitcoin or LST BTC, which will start minting out here soon. And the idea here is these are some of the missing ingredients, not only on the sustainability side, but also the utility. And this is what Core ultimately strives for when it's improving the network, is what are the missing ingredients, and then how do we go max it out as fast as possible to enable more and more of this on-chain utility demand. And I've mentioned this before, but Core is a product-focused blockchain. What that means is delivering to people what they want, whether that's builders, whether that's users, and all other sorts of institutional audiences. But the end of the day is, if we're building stuff people want, we'll continue to do so, and Fusion is no exception there.
Mm-hmm. Yeah. In regards to the LSD Bitcoin token, how can you kind of see liquid staking tokens enhance user participation and liquidity within the Bitcoin staking ecosystem, specifically for Core and then like the broader market?
Yeah, I think LSD is just. Oh, go ahead. Sorry.
No. I've been talking the whole time.
That's what we got you guys for. Go ahead.
LSDs are. I feel like I'm kind of hitting a lot of the same points today, but it gives you so much more you can do with your assets, right? We've seen how widely adopted Lido and other LSTs on Ethereum are, and just getting a receipt token that you can go use in DeFi, you can go deploy in a lending protocol. There's all this great stuff you can do on Core specifically now, and so as just a product-focused chain, this liquid staking is not going away. I think it's one of those things that once you get comfortable with staking, the next question so many people have is like, well, dang, my tokens are locked up now. Like, I wanted to go do stuff with them, and this is just the way to go do stuff. Deploy them somewhere.
100%. Leo, I know you have to jump. I just saw the time, but is there any final words that you would like to add before we, continue the conversation?
Nothing new, really. I very much agree with what Drake was saying around the liquid staking tokens. That's somewhere where we plan to work very closely with the CoreDAO team as well. And I really commend Rich for making a great product. I think again, one of the things that drew me to this project was that it was very product focused. The founders were here to make something that lasts and not here to just pump a token and leave. So I really appreciate what they've done for us, and I'm looking forward to the growth of the project. So great job, guys, and we'll see you soon.
Yeah, we still got everyone else here. Leo, have a good one. But in regards to the liquid staking token, I still want to talk a little bit more about that. Obviously, CoreDAO is going to bring that to the market soon, but how can that innovation kind of help bridge the gap between TradFi and Bitcoin DeFi? We've talked about investors looking for yield options on Bitcoin, staking, etc. But what role can this play?
Maybe to begin,
and then
that's how Rich possibly
go ahead, go.
One of the most important points I think Rich mentioned earlier is education. With innovation comes a lot of education. I think the products that CoreFi has adopted is, when you think about the real meaning of these products, they are actually nothing new. It's just in a different sort of ecosystem. A lot of these products are quite familiar financial structures that do coexist in the traditional markets. So it's really important to just educate and inform. And as a custodian, a lot of our job is educating and informing and trying to elevate products like CoreFi to make it a lot more real with our clients. And that's something that we see is the education aspect is huge when it comes to new innovation, and it's really kind of bowing down to the traditional structures that do exist to kind of help them help new investors or new participants in this market to understand the sort of familiarities that help them eventually deploy more capital. And another point is the concept of collateral has existed since decades and decades. I think a lot of the terminologies that are used sometimes get a bit confusing, and that's why for all the panelists here and other participants, the education factor is so much more important.
Yeah. On the education note, where do you think institutions are today when it comes to understanding all of these different variables?
I think at this moment, given the regulatory framework, maybe I would say before the change in government, there was a lot of uncertainty in terms of them even recognizing this as an asset for them to enter.
Right.
There was no sort of standardization from the SEC in terms of how do you classify an asset? Where does it fall under the regulatory framework? What is it taxed? All of these factors are quite sensitive to traditional players, especially when you're thinking of Bitcoin and all other cryptocurrency assets as new in this sort of digital asset realm. I think the change in government has kind of increased the sort of forward-looking thinking towards an asset like this, an industry like this. Hence, I think at this moment, nearly every fund is kind of looking into this a bit more seriously. MicroStrategy is hitting the newspaper nearly every day. It's quite hard for someone to constantly ignore it. Charles Schwab's CEO mentioned a few days ago, he regrets not buying Bitcoin. There was a lot of news about MicroStrategy presenting to the Microsoft board about, hey, you have 80 billion in assets. Why don't you allocate, 1 or 2% to Bitcoin? So a lot of these, sort of topics are coming up, and it is as regulatory framework starts to kick in a lot more seriously, especially in the U.S. We're going to see a lot more movement in this front, and the education is just going to get quicker and quicker for people to understand it, and people will deploy capital a lot more faster.
Yeah, I think the price FOMO and the just, oh my God, if I bought Bitcoin in 2018 is what gets so many people in traditional finance to at least first take a look. And now that the regulatory environment seems like it's going to clear up at least a lot in the US in the near term, I think some of the career risk and just overall, if I buy this and it goes to zero, how do I explain this to my clients? It's gone. Everyone's talking about it now. Everyone has to have a strategy around it. It's kind of just an inevitable thing. And I think once you get the price and the increase and the appreciation potential is kind of the first thing in the door, and the next thing is like, oh no, I'm starting to understand that these technologies are just better than the existing system. Like there's just more you can do with them. There's higher capital efficiency. You think about these banks that have just thousands of people in their back office. It's like this is just an execution custody settlement in one transaction. It's just better.
And I think you have a great point there, Drake, around career risk. And I think if we go back, let's call it, 5 years ago, it was all like, would you allocate 1%, right, to Bitcoin was kind of the thing. And prior to that, it was like, total kind of cowboy land. And now it's almost, if you're not allocating to Bitcoin, you're almost derelict, right? Like you actually almost have now kind of fully shifted, and that's a big change. And I think what we're going to see with Bitcoin yield is very similar. So right now there's folks that are on they're pioneers. They're allocating some percentage of their funds, their customers' funds, again, in small amounts, but we expect to come on with size. And I think over the next few years, it'll be very similar, where if you have Bitcoin, it's not earning yield, you also will be derelict.
Yeah, I think now is a good time to also talk about like the forward looking of everything, looking to the future for Core as well as the rest of 2025 for the other panelists in your businesses. What kind of other aspects to both Core and its products, but the broader Bitcoin ecosystem, are you guys paying attention to and thinking will pan out?
So should I start with Core? Sorry, my segues
Core
today
are the broader off. Bitcoin. Let's do that.
Cool.
I'll direct it. Go ahead.
Awesome. Sorry, I'm like, my timing's off today. So in terms of Core, so again, really strong execution throughout all of 2024, 2 major upgrades, and really kind of setting the table stakes for the future. In 2025, you're going to see us continue to execute and to go expand. And some of the ones that we've announced so far that we're super excited about are local fee markets. We've been talking about this for a while, but we'll be the first EVM chain to bring this forward. And local fee markets, for the uninitiated, are fast, cheap, and predictable transactions, regardless of network congestion. So the idea is getting out of those, kind of previous states where all of a sudden it costs hundreds of dollars to make a transaction when the network is congested. That will be a thing of the past in Core. And again, truly kind of innovating on the EVM side. On top of that, we're going to get into some very interesting new platform revenue sharing mechanics, where as a DApp or potentially an issuer, you will actually have new ways to monetize. And you'll see some pretty interesting partnerships that get mentioned there in the coming months. But overall, it's very aligned with Core's ultimate goal of building a revenue-generating platform that not only allows it to self-sustain, but also allows its partners to build, hopefully, world-changing businesses on top of the platform. We'll have other pieces, that will come out as well. But those are, I think, what we're talking about so far. I think the way to think about Core in 2025 is expanding the net farther and farther. So Core is number 1 in every Bitcoin category, which is a very amazing place to be. But Core's ambitions are so much bigger. It wants to be the most utilized blockchain, piggybacking off of Bitcoin, and ultimately hoping to get Bitcoin in the hands of billions of people around the world, which due to Bitcoin fees, et cetera, is not possible to do on the Bitcoin main chain itself. And I think another major area of emphasis for us early this year is stablecoins, early next year will be stablecoins, because that's let's call it closing of the loop of the original Bitcoin be your own bank kind of 2013 indoctrination that I got. What we've learned is people don't really want to use Bitcoin for payments. They just want to hold on to that till they die. Not a bad viewpoint. But what they want to do is they want to borrow against it, use it as this perfect collateral, and we'll start to see stable coins proliferate on Core as well. Having almost $1 billion in Bitcoin TVL, it's a really natural merging of those two. And I think that's probably the stopping point for what I can say today, but it'll be an action-packed 2025.
100%. Looking forward to talking more about it. Drake, Roshan, what's your take?
Yeah, that's a good teaser to end on there, Rich. So we'll have to stay tuned. I think broader adoption of Fusion for Core specifically, people just kind of wrapping their heads around it, and that kind of flywheel effect you were discussing earlier. Proliferation of dApps. I mean, I think just you look at the people that are in the Core ecosystem now, the amount of large custodians, validators, miners, it's kind of just getting really the kind of who's of the institutional crypto community around it. And I expect to see that to continue. The local fee markets thing is really interesting, right? This is kind of the model that Solana has had, and it's just proven to be so successful. You can keep the median transaction for the average I just want to, I don't really have a super high priority. I just need to get this transaction done. Makes it cheap and fast, easy for the average user. And then, if I am doing something in DeFi and I have higher expectations, like I need to get this done, I can pay more, right? So you kind of have that dual model that's worked so well on Solana. It's exciting to see. Outside of Core, I think that just more of these really on-chain primitives coming to the masses, the institutions, it's kind of inevitable now with the regulatory clarity coming in the US. You're going to see things like traditional staking, liquid staking, Bitcoin staking, probably coming to a broker, a bank, an app near you very soon. It just feels inevitable.
I think from my side, I think custody is just really one aspect of our business. But I think with the recent news, on how we've grown, staking and providing market services to our clients is really the add value, the mission. For Core, our partnership with them, it's not just supporting the assets for us, but to eventually bring their products, their innovation to our clients. So as this becomes a lot more of a significance as it is already with especially Bitcoin, clients are going to be wanting to do clients are going to be wanting to do much more with their asset, earning passive yield, engaging in dual staking like products. A lot of them are quite comfortable in a more secure infrastructure like ours. And that's why it's really important for us to work with players like Core to really bring those products to them.
Yeah, I think we've covered a lot of ground here. And before we wrap things up, I just want to ask each of you if you could say, what is one thing that you are most excited for in the coming quarter and/or year out of all these conversations and topics we went over? Whatever came to mind first.
So I'm happy to kick that off. I think I'm most excited for CoreFi. And the reason I'm so excited for CoreFi is because it wraps up all of these different things that we talked about for a new audience. And that's one of the big, kind of pieces that Core is focused on is we have this very large community. We want to continue to double, triple, 10x, continue to grow. But we also want to appeal to some of these other folks who maybe aren't as crypto native, can't get involved directly on chain. And that's what some of these public market vehicles ultimately enable. And that's a pretty untapped audience for most major projects. So it's a new kind of exciting endeavor for us as well. And then the fact that it ultimately is driving demand for dual staking is a really, really nice kind of through line through the whole thing.
I think for me, I'm probably most excited for applications. For a long time, the narrative in crypto has been, infrastructure. That's where a lot of the investments happening in the space are. And I think if you peek a little bit into the future, you can really see some cool stuff getting built. And I think you're going to see a lot of, Web2 social media founders, fintech, rewards, points, whatever. There's going to be so many new things that get built using on-chain primitives. And I think you're going to see some really creative ways that developers take advantage of the advantages of blockchain to just give such a better user experience, better offerings, just more stuff to do, right? Besides just lending and trading like you have today. So that's what I'm most looking forward to.
I think from my side, definitely regulatory framework. We've taken a very licensed approach, with how we've approached our business, and with the change in government, it's opened up the floor a lot more. As one really good point that Rich made earlier was, it's funds not thinking about the career risk side, but it's more about, hey, we should actually start looking into this right now because it's a lot more real. It's a lot more serious. So for us, the education factor is a really huge thing because as licensing regulatory framework comes in, it opens the doors for us a lot more as a custodian. And I think secondly, working with, as one of the great points that Drake made, and what CoreFi is doing as well in this industry is working with innovative projects to bring very good innovative products to our clients, so they are able to earn passive yield, do a lot more with their asset than just keeping it as a store of value.
Yeah. Oh, that all makes sense. And I think we are at time here, but thank you to our panelists for taking the time to share all your thoughtful insights today. And thank you to everyone for listening in. Looking forward to talking with Core Ecosystem again next quarter.